Welcome to the podcast. We're in a little different setting this time. We're both, it's Thanksgiving week, so happy Thanksgiving. You're not going to see this till after, but or listen to it till after. And nobody's really listening to it yet. Anyways, thanks, Mom. Love you.
Thanks, Reg.
Reg, checking it out. But we're gonna talk through some market stats in Utah right now, and just go over some interesting news, and we'll get into it. So, I'm Nate, one of your co-hosts.
And I'm Parker, the other co-host and property manager here with Mission Property Management.
Yes. So let's hop right into it. I'm gonna share some stats really quick. Okay. So this is from Rapid Stats. This is tied into Utah Real Estate's MLS. Multiple listing site, utahrealestate.com. And this will just give you general information on what's happening in the market right now. So we're just looking at trends. So as far as properties that have sold compared to this time last year, typically, we're going to look at this number right here. So up to date. So the last 30 days in comparison, we're down about 20%, which isn't great. Things are moving a bit slower, not only in the sales market, but also in the rental market across the country. It's the slowest season ever over the past 10 years as far as getting renters in and also finding buyers. So I don't know. What are some of your thoughts? Why do you think that is?
Honestly, I feel like it's a lot of what is going on with the affordability. I actually just saw a chart yesterday that was given across the U.S., a likely percent in the next 18 months of which state would be likely to hit a recession.
Okay.
And this chart was basically projecting that almost 40% or 32% of U.S. states are going to hit a recession in the next 18 months. So I think a lot of it is that a lot of people are just waiting and seeing what's happening, right? And we just like hearing the news that like, oh, nothing's going to happen. But I think people are like, no, something might happen. Like, I'm going to hold off. And I think that's kind of what we're seeing.
I've seen a lot of people that are moving into families properties, and combining,
Yep.
instead of going out living on their own, getting their own place. It's like, oh, we can move into family, maybe a bigger home, or moving back to mom and dad's house if they're younger,
Yeah.
Even family with kids. I've seen that even in my neighborhood, families have moved back in. So interesting times. This supply versus demand chart is pretty interesting as well. It's looking how much supply just keeps slowly. It looks like it's slowly increasing over time, over
Right.
48 months, and the demand has dropped off after, let's see, when this is July, August of 2022. So right at the end of COVID, and then through, it's just been flat and decreasing over this year. So, again, comes down to the affordability thing. I think people are just like, oh.
Yeah, very true. The affordability and space too. If you can move back in with your parents or move in with a group of people, at least you have a bigger space.
Yeah, with the jobs market too. I mean, we there's two different sides to that. So it's like we see the jobs stats numbers or whatever that whatever job loss happens, and then it's like then we feel it like close. It's like, oh, my brother-in-law just got laid off. Oh, my friend or whatever, and we see it a lot closer. And it's like, of all the people what percentage of them are getting laid off or like out of work or hard to find work and things like that. And it's like it feels like it's up quite a bit right now as compared to a few years ago. So
yeah, and the hiring rate afterwards. People I've talked to who have recently lost their job at the beginning of the year. It's taken them almost 6 months to get a job. Almost not even in their field either. They just kind of had to switch fields or are trying to adapt to a new opening.
Yeah, no, it's true. It's like, I think employers are hesitant to hire as well. Yeah, it's just a tricky market. So
Yeah.
here's just a few more stats to share really quick. So average days on market, we are way high right now. 65 is really high for Utah. Uh, we'd like to see that in the 30s, and things are fairly even as far as buyers sellers go in the 30s. And then when it's less than 30, it's usually sellers have the advantage. But this is saying that buyers have a huge advantage right now, even though most sellers, I don't know if I'd say most, maybe 80% of sellers have really low interest rates and maybe don't have to sell. They have a ton of equity or whatever. They're still going to be price dropping because they're wanting to move the equity into something else. So maybe they're nervous that the market's going to like go down a lot, and so they'll lower price a little bit in order to make that happen. Cool. Well, let's jump into some national news. What's going on?
Yeah, some national news. I mean, this could be very interesting, big news for the lending market. Fannie Mae has decided to basically cut their minimum required credit score, uh, which was about at 620, which when you think
Yeah,
about it,
620.
it's not a terrible credit score to have in general. I think even with people who got hit with the student loan credit doc at the beginning of the year, I mean, most of them are still above 620 anyway, but that could be interesting. So yeah, their holistic review is that instead of getting rejected for a score below 620, the desktop underwriter will now look at income stability, debt to income ratio, cash reserves, and payment behavior. Um, which honestly, if you're somebody who's like my dad, he didn't have a credit card for 30 years, you know.
Yeah.
He was just very against credit, but then he was 55, went to go buy a truck, and they're like, "Hey man, you don't have
Yeah.
any line of credit." And they're like, "So like how can we help you out with that?" Um, so it could be interesting in that sense. You know, there's an alternative credit data. It's like a think on-time rent, utilities, phone bills, those can now help increase your credit score. It could also lead to greater flexibility, which could be especially helpful for people who had one-time setbacks or like medical bills or job gaps. So it could kind of help out in those aspects.
Yeah. Dave Ramsey talks about this idea of credit, the credit score kind of scam,
Yeah, yeah,
where it's like it forces everybody into having to get a credit card or just
right,
like acquire debt basically in order to prove that they're credit worthy, in order to be like lent money on things that actually matter, like buying a home or
right.
things like that.
Yeah. But it's like, oh, most of the time it's like a travel rewards card, like pay for the trip. And it's like, okay, well, I just went to debt for a trip now, or like things like that.
He has a unique strategy or perspective on it because he's like totally against getting credit. Yeah, so Dave Ramsey says he doesn't believe that you need a credit score at all. Which is like I don't know how you get to that point where it's like you have to get a loan for a home. It's
Hmm.
like what are you going to do? You're going to do like a bank statement loan. It's like you're not going to get a favorable rate with a bank statement loan.
Right.
Let's see. Utility payments, phone bills. So yeah, you brought some of this up. Like if you can look at utility payments, phone bills, and things like that. If you're consistent, then you should be able to produce some type of
Yeah.
some score, Vantage score. There's the FICO, the Vantage, and then alternative credit score models. So it's either you're gonna have some credit or you're gonna have no credit, like maybe like your dad. It's like that's I'll have to talk to my wife is a loan officer. I'll have to see what she has as far as like when
Yeah.
it comes in with no credit, like what are their options?
Yep.
So maybe we'll touch that on another episode.
Oh yeah. Yeah. And a few things to point out too with this credit score cut, definitely like doesn't guarantee an approval if you have a lower than 620, Lenders can still set their own minimum scores depending on the lender that you go with. Lower scores could still mean a higher interest rate. So just because they're not taking your credit doesn't mean you're going to get that low, the 399 or the 425 deal. In some cases, an FHA loan still might be better fit for borrowers with a few financial reserves. So I'm curious if that's just going to be considered for conventional loans. They didn't really talk on that.
So,
Yeah. Why this could matter to landlords could be quite interesting. More buyers could be more competition for housing, more financing options, and potential uptick in property values down the road. But it could also mean first-time home buyers entering the market and exiting the rental pool. But I feel like there's always going to be renters. There's always going to be people who don't want to buy and things like that.
yeah, and early stage people too.
Mm-hmm.
So Utah's demographic, I think we're the youngest state in the nation. So like our average age is below everybody else, which means it's like we're going to be in the lower category as far as people needing housing. And it always starts with renting in most cases, right? People aren't going to go straight and buy a house. They'll probably rent a property first until they
Mm-hmm.
up and then buy. So, and as far as that ratio goes, it's like it was like 2/3, almost maybe 3/4 in some cases, the price to rent versus buy, like what a mortgage costs versus what a rent costs. So
Yeah, and Utah's a big college. Well, at least where we are, college cities and everything like that. Like
two major colleges, yeah.
college kids aren't buying homes. They're just renting for the year or the semester, and
Yeah, they don't know where they're going to
yeah,
go after, school. So
yeah, yeah. But it could be interesting. I mean, it's my understanding. I was a little young in the 2008 crisis, but it was a whole mortgage issue where they weren't necessarily giving out the right loans to the right people. And that was starting to cause a big part of these foreclosures and everything like that. And so could be interesting now if they're cutting that minimum credit score. Not that you necessarily need it, but it could open up a path to lending to the wrong people.
yeah, no, I for sure I agree with that. I don't think we'll have policy issues or as far as getting people lending to people that don't qualify. I don't think this change in credit score is going to massively change that. I think lenders are still cautious, even though they need to make money still with new loans. Yeah, it'll be interesting to see how it affects it. But
Yeah. Yeah, because if you're checking bank statements and income, you can see all that interaction anyway. It's not like there's anything they're hiding at that point.
yeah, for sure. Well, I think that's it for today.
Yeah, short and sweet.
Short and sweet. Knock out. Hope everyone had a great Thanksgiving, and we'll catch you on the next episode.
Yeah, thanks for tuning back into Utah Rental Property Insider. This has been Parker and Nate. I got that thing down now.
Yeah, that's good. It's perfect.
Oh, yeah. Enjoy the holidays. We'll see you guys later.
Okay, catch you next time.